Tushar, so good having you. Thanks much for taking the time out. Good afternoon. In your experience, Tushar, whenever in the past, due to events or otherwise, when you've seen such position changing and such volatility at the start of a series, what would your belief be about what the near term could hold in store?
So I think at this point in time, the way I look at it, all of the data points to an extreme sense of fear. And, in my experience, I think that's when the bottoms get formed. So if you look at overall positioning from FIs, that's been the most short that it has ever been in almost like 6 years. If you just look at the net numbers, if you look at the volatility index, we haven't seen 25, in times when there's no election results or such big macro local event kind of trading off. The quantum of foreign selling that we've seen, and this kind of position change also forced you to have a lot of forced liquidation of long positions. So I think all the factors pretty much point to a fact that the sense of fear is extreme, and when you rebound from these levels, the recovery could be fairly sharp as well. Have we seen the bottom yet? Tough to say, but I think the risk reward probably is now moving in favor of the longs.
Okay. Specific to sectors, have you seen any unnatural build-ups, Tushar, and any excessive positions that could overturn in the coming few days?
I think the positioning has become fairly light. I was just looking at some stock futures data. This time around in the rollovers as well, ever since the physical delivery started, you've always seen overall rollovers being over, 90%, 92% in that range. 95% also, I think one of the series saw that. But this time, we are back to about 85% on the market-wide position rollovers. So we started the series with a relatively lower kind of an open interest. And that was, obviously due to the fact that rollovers were weak, and also, what has been going on in the markets for over the last 10 days or so. And so excessive positioning, which could overturn on the short side, tricky. Excessive positioning on the long side, sectors which have been beaten up. I think auto components, because that is one space which seemed to have gotten a fair bit of mind share in terms of supply chain disruptions from China. So the likes of, Amara Raja Battery, Exide Industries, Motherson Sumi, I think those kind of names could potentially see an overturn in terms of, market rally and, an aggressive bout of covering. I think the other space could potentially be on the auto space itself, with the two-wheelers, especially the likes of Hero Motor and Bajaj Auto. They've seen a fair amount of shorting as well. So those could see some kind of a turnaround. And finally, on the metal side as well, we are seeing some of that already in metals today. But if this sustains, metals could be another space which could see a fair amount of aggressive short covering.
Tushar, more interestingly on the banks and the positions that were there that were carried forward through February up until now, and the kind of weakness that we're seeing across the board, does that reverse itself because of the shorts that are there in the system? Do you see a larger quantum, a leap on the upside if those shorts start to get covered up, or that will move in tandem with what the index does itself, the Nifty?
Yeah, I think that would move and probably in tandem with what's happening with the Nifty as such. We've seen the Bank Nifty, been underperforming the Nifty for nearly about 2 months now. The reasons have been different through the journey of this underperformance, but I don't see that, you could see like a massive bout of short covering coming through on banks, because there doesn't seem to be a trigger, unless, of course, we still have the policy in another month. If you start seeing a build-up happening where rates are going to be back again on the cutting track and stuff like that, like we've already seen with some of the other central banks in the world, that could be a trigger for a covering per se. But as we sit down today and talk, I don't see any specific reason where a massive short covering rally in banks could trigger outperformance versus the Nifty.
Tushar, I'm just going back to the higher wicks that you were mentioning, and I was reading one of the reports which suggested markets tend to bottom. Historically, this is when wicks touches the mark of 30, pardon me. Do you concur with that? If that's the case, how much more downside is left? And if, let's say, 11,000 gets breached, where's the bottom that you see for Nifty?
See, I think the way I look at VIX is the fact that, it is clearly an index of fear, and but calling levels for it is very tricky. The reason being that the reasons for fear or the quantum of fear at every point in time is very different, and it's very specific to that particular time frame. So it's difficult to say that whether that level is 30 or whether that level is 25 or whether that level is 35. To my mind, I think the kind of levels that we are seeing right now should be closer to the bottom, and I don't think that we see this going all the way to 30 at all.
Okay, let's say if this is the bottom, this is the peak for India VIX. Would you then agree the range in the near term for Nifty could be between 11,000 to 11? The recent yesterday's high, I will take 11,004 or 430.
I would think so. I think for the kind of magnitude of the fall that we've seen, 11,000, 11,050 odd would be a fairly strong support zone for the market. The upside, it should get stuck for some time at 11,400 from the lows, but if the momentum kind of continues, we could probably inch back higher to 11,700 in a very short period of time. But it will take a pause, like you said, at yesterday's highs, and even in terms of the positioning, open interest build-up, etc., both for the weekly and the monthly expiries, that level seems to be a stronger resistance at this point in time.
1,700, I think that should be above the 200-day moving average. That should be a convincing move if we get to see. Tushar, one stock which is the heavyweight on Nifty, and that's HDFC Bank I want to talk about. Of course, the reasons for correction in the recent past can be due to change in management, a lot of conjecture around whether it will be an internal or external candidate. I will stick to technicals here. It's been trading below its simple 200-day moving average. Do you see in this series we can see any bounce back for this heavyweight quality stock?
Yeah, I would say that, I think it's a bit unfair to kind of single it out to say that this has been trading below the 200 DMA level. I think it's, I would probably look at it as it's probably one of those stocks which held Nifty below, to sustain at the 200 DMA, before it fell. So it's just a way of kind of looking at it. I would definitely think that, if we're talking about a level like 11,700 or so for the Nifty, if a rally continues, you would see the stock to start performing. Remember that the stock is not in any of the passive indices which foreigners track. So you don't have, the stock is kind of insulated from that kind of selling pressure, and any kind of correction warrants a whole interest from long only buyers to kind of come in. So I don't, it could languish below the 200 DMA as long as the market is trying to be there, or the sentiment stays there. But it would definitely be a market participant on an up move.
Okay, and remains to be seen. But of course, it's a FI-owned stock. Just one last question, Tushar. How are you reading the FI positioning? They continue to remain net short on index futures. Just first sign of profit booking on the short side came in yesterday when we did see some almost 30,000 contracts being unwound on the short side. For the series now going ahead, what are you reading into their internals in terms of FI data in the futures and options market?
So I think what we saw yesterday in terms of the unwinding, a lot of the fast money or the systemic trades and those kind of trades, I think those got unwound. So a lot of the froth on the short side definitely got unwound yesterday. And what you see right now is positional shorts. And I would tend to think that there would be another rally of covering, which will get driven by covering from positional shorts. Overall positioning at this point in time obviously is short. We've seen the retracement which happened yesterday from almost like 6-year high positioning data on the short side by foreigners. But my sense is that this has more room to go.
All right, got that. Tushar, thanks very much for joining and really appreciate you taking out the time and speaking with us. That's with regards to what's been happening in the futures and options space, the FII positioning out there, and what's likely to come about.